Good day everyone. Today I will be presenting an analysis of Malaysia's trade performance from 2015 to 2020-24, focusing on key trends, sectoral insight, and strategic recommendation for the future. The data we'll discuss includes both export and import trends, along with the country's trade relation and regional performance. Let's begin with the first graph showing Malaysia's overall trade performance from 2015 to 2020-24. Over the past decade, Malaysia's trade has shown consistent growth. The total trade, which includes both export and import, demonstrates positive growth with domestic export leading the way. This growth reflects the strength of Malaysia's core industry such as electronic, palm oil and chemical, which have seen increased demand globally. The rise in import during this period suggests the country's ongoing investment in manufacturing and infrastructure to support this export activity. Moving to the second graph, which compare domestic export with re-export from 2014 to 2020-24. We see that domestic export have steadily increased. This highlights the strength of Malaysia's local production, particularly in sectors like electronic and palm oil. Re-export have also risen, indicating that Malaysia is increasingly becoming a key trading hub in the region, adding value to goods before redistributing them to other markets. Now, the third graph shows imports by end use from 2016 to 2020-24. It's clear that intermediate goods dominate Malaysia's import. This is a reflection of the country's manufacturing sector, which require these goods to produce finished products for export. Additionally, we see a rise in the import of capital goods, signaling that Malaysia is upgrading its industrial base to enhance its production capabilities. Looking at the fourth graph for 2020-24, we can see that Malaysia's major export by sector are dominated by electronics and electrical products, particularly semiconductor and electronic devices. These sectors continue to perform well due to the global demand for technology. Palm oil and chemicals also contribute significantly to Malaysia's export performance, showing the diversification in export sector. In terms of imports, the fifth graph shows that electronics, machinery, and chemicals are the top category. This highlights Malaysia's reliance on these goods, which are critical for its manufacturing sector. These imports are essential for Malaysia's export-driven industries, particularly in electronic and machinery. When examining Malaysia's major export destination in 2024, we can see that Asian countries, China and the USA are the largest market. The strong trade ties with Asia highlight the benefits of proximity and the free trade agreements that Malaysia has with this nation. Export to China and the USA showcase Malaysia's competitive industry in electronic and manufacturing. These markets are essential to Malaysia's trade strategy, although the country should also work in diversify its export destination to reduce over-reliance on these key partners. For imports, China is the largest source, followed by Singapore and Japan. This shows that Malaysia is highly integrated into the global supply chain, particularly in electronic and machinery, which are vital for the country's manufacturing sector. Malaysia's reliance on import from China underlines the need for resilience in the supply chain, and Malaysia should consider diversifying its import source to mitigate potential disruption from geopolitical tension or supply chain bottleneck. Malaysia's trade with Free Trade Agreement (FTA) countries within ASEAN has seen steady growth. Export to Asian countries have slightly outpaced imports, reflecting the success of Malaysia's economic integration within the region. The Asian Economic Community offers significant trade benefits to Malaysia, particularly in sectors such as electronics, palm oil, and chemical, which further strengthen Malaysia's position as a regional economic leader. Finally, we can look at the export contribution by state in 2020-23. Penang leads the way, driven by its electronic industry, followed by Selangor and Johor. However, smaller states have underperformed in export contribution, indicating regional economic disparities. To address this, Malaysia should focus on promoting balanced regional development by investing in infrastructure and industry in these less developed states to stimulate local economies. Looking ahead to the next 5 years, Malaysia's trade performance is expected to continue growing, driven by the electronic sector. As global demand for semiconductor, 5G technologies and electric vehicle increases, Malaysia's electronic industry will continue to be key export driver. Additionally, imports of capital goods are expected to rise as Malaysia invests in upgrading its industrial infrastructure to remain competitive. However, Malaysia will need to diversify its export sector to reduce reliance on electronics and palm oil. The emerging global demand for green technologies, renewable energy products, and eco-friendly goods present new opportunity for Malaysia to expand its export base. In terms of imports, the country will continue to rely on machinery and intermediate goods, but efforts should be made to strengthen local production of these goods to reduce import dependency. Furthermore, Malaysia's trade relations with Asia, China, and the USA will remain vital, but the country should look to expand its trade with emerging markets in the South Asia, Africa, and Latin America. This will help reduce its reliance on specific markets to ensure broader growth. To ensure Malaysia's continued success in global trade, there are several strategic recommendations. Firstly, Malaysia should focus on export diversification. While electronic and palm oil are key drivers, it's crucial to invest in high-tech industries such as biotechnology, renewable energy, and electric vehicles. These sectors are expected to see significant global demand and could provide Malaysia with new competitive advantages. Secondly, addressing regional economic disparities is essential. States like Penang, Selangor, and Johor dominate export, while smaller states contribute less. To reduce this imbalance, targeted investment in infrastructure and industry-specific incentives should be provided to less developed states, promoting more exclusive economic growth. Thirdly, Malaysia should strengthen its trade relation with emerging markets in regions like South Asia, Africa, and Latin America. While Asia, China, and the USA are key trading partners, exploring new markets will help Malaysia reduce its dependence on these regions and tap into new growth opportunities. Fourth, sustainability should be a key focus. By investing in green technology and eco-friendly industry, Malaysia can position itself as a leader in sustainable trade, meeting the growing demand for environmentally conscious products. Lastly, to build resilience in trade network, Malaysia should focus on diversifying its import sources and reducing its dependency on specific countries. Strengthening domestic production in intermediate goods will also help reduce reliance on imports and ensure long-term trade stability. In conclusion, Malaysia has shown strong trade performance over the past decade, driven by electronics, palm oil, and other key sectors. However, addressing challenges such as over-reliance on certain industry and trading partners is crucial for sustainable growth. By diversifying export, investing in sustainability, and promoting balanced regional development, Malaysia can continue to thrive in global trade and maintain its competitive edge.